While traditional investing typically prioritises financial return, investing in our world to attract climate finance intentionally seeks measurable social and environmental impact alongside those financial returns. This nuanced approach requires specialised expertise to navigate the complexities of generating positive change while achieving financial goals. ECO's technical know-how in mobilising climate finance from private sources encompasses several key areas. We specialised in designing climate programmes and funds with the private sector that bring in concessional finance from public sources such as the Green Climate Fund or the Global Environmental Facility. Having worked with these global climate funds for many years, we enable institutional investors, asset managers, and impact investors to access GCF funds that deliver multiple benefits. Firstly, concessional finance provided by the GCF reduces the cost of capital for climate projects, making investments in emerging markets and developing economies more attractive to private investors. By accepting lower returns, the GCF funding helps yield a higher rate of return for private capital, enabling a larger number of climate investment opportunities to become financially attractive, thus unlocking additional private capital. Secondly, in private equity projects that ECO supports, the GCF can act as a first loss taker, enhancing the potential risk-return profile of investments and making them more appealing to private equity players who might otherwise avoid high-risk markets. A first loss mechanism builds investor confidence by shielding private equity capital from adverse outcomes in the early stages of project performance and piloting new and innovative climate technologies. This protection encourages private investors to enter unfamiliar markets, catalysing additional investment flows and market transformation. Lastly, we support private investors in investment portfolio construction and design of investment guidelines and criteria, strategically balancing impact and financial goals. For example, we design investment portfolios spanning early-stage climate adaptation technologies such as early warning systems, climate-resilient infrastructure, climate-smart agriculture, and ecosystem-based adaptation solutions, through to mature mitigation projects such as solar, wind, and hybrid energy or battery energy storage systems. This approach helps manage risk while maximising both environmental impact and financial returns through strategic asset allocation across different climate solutions, geographies, and investment stages.